everybody. Welcome to the Empowered CPA podcast. I'm your host, Dawn Scott. Today, we are going to be talking about the elephant in the room. It is officially tax season, and it is time to start getting your stuff together. We have so many different types of documents that we need. Everyone's a little different. They all come via different modes. Some come electronically and some come in the mail. So the sooner you can get your things organized, the easier this entire process is going to be. So really taking into account what you have had in the prior year is a really good place to start. Making sure that you receive all of those documents, and then anything you may have added during the current year, just take note of those things and make sure that you get all those things as well. So I think what I'd like to do today is kind of go through high level what the different things are that you need to do for tax season, kind of a high level explanation of what they are, when they're due, how you can pay, what to do if you can't pay all at one time, and then really give you guys a good roadmap to success to make sure that this process is as easy as possible, as stress-free as it can possibly be. Because this is an area of our life that everybody has to do, but it is insanely stressful for most of the population. So to get things started, what I think is most important is a couple of different terms that you'll hear thrown around in the industry that you may or may not know kind of what they are. So the first one is a Form 1040. If you're talking to an accountant or you're talking to someone in the industry, they throw around these form numbers. And I mean, let's be real, most people don't identify what any of these mean. So a Form 1040 is our personal tax return. It encompasses everything we do, either as a married person, a married separate person, a single person, head of household. There's lots of different things, but this is the form we use for us as a person at the federal level. Every state has a similar form that you fill out based on their state requirements, and those form numbers vary, but the 1040 is the federal version of you, your person, and all the amazing stuff you did in the year before. So if you're a W-2 employee, you report it there. If you had interest or dividends from a bank, or you're a day trader, or you're, anything you are, it all goes on here. If you are self-employed, this is also an option that will be reported on here in a myriad of different ways. But if you are someone who was part of the Great Resignation, where we all left the comfort of our W-2 jobs, you're going to fill out what's called a Schedule C. The Schedule C is going to have all of your income from the year, all of your expenses from the year, and that information is going to do its thing. It's going to cook in this section and then go automatically to its other places. One of the questions, I did a mastermind last week for a really incredible group of women. And one of the questions that I got during that, which is a fabulous question, was what happens if I have more than one business? Do I report them all on the same Schedule C? Do I do multiple 1040s? Like, what the heck do I do, right? So the answer is you always have one 1040, no matter if you have 100 businesses, 1 million rental properties, whatever you do, you always have one Schedule C, or one 1040, I'm sorry. The Schedule C, if you have, say, like for myself, so I own a blow dry bar. My blow dry bar is very different than my accounting practice. So those would be two separate Schedule Cs on my tax return, on my 1040, because the income and expenses related to the blow dry bar are completely different than the income and expenses related to my accounting practice. So you can have multiple Schedule Cs within that 1040. And honestly, if they're as different as mine are, they need to be reported differently because you need to be able to show them as separate businesses. Now, one form that we get as independent contractors is this Form 1099. In 2020, the IRS had some extra time on their hands, and they changed the form to a 1099 NEC. Now, I have really good friends who work at the IRS, and that form was apparently in the works for years, so it just was a happenstance that it came out last year. So I joke. But it's just because you get multiple 1099s doesn't mean you need multiple Schedule Cs. So you can add all those 1099s into your income for that particular business type. One thing to consider, and one thing I hear a lot is, well, if I didn't receive a 1099 for it, I'm just not going to report it. Now, we all know that any money we make, regardless of the limit in our business ventures, needs to be reported. So it needs to be reported if you got a 1099, if you didn't get a 1099. And one of it's just, you're supposed to, it's legally what you're supposed to do. But also, if a company goes back years later and says, I forgot to issue this person a 1099 and reissues it and issues it late, you're going to find yourself in hot water because you didn't report the income. So you're going to have an adjustment on your tax return, and it's going to come with penalties and it's going to come with interest because you didn't report what you were supposed to report. Whereas if that happens and you did report it the way you were supposed to report it, you can reply back to that IRS notice and say, I did not receive that 1099. You are correct, but I did report it. Here it is. And then all of that stuff goes away. So it's really just ensuring that you're doing things properly, because no matter what happens in the future, no matter what people amend or refile, you will be covered because you properly reported all of your income. Now, another thing to note that's super important is the due dates around these tax returns. So the 1040, which is our personal tax return, is due on April 15th. In the last 2 years, we've seen that extend a little bit due to the craziness that we've all endured. I wouldn't count on that this year. I don't know that we're going to see that again. I don't know for sure we won't, but best to pretend like April 15th is just going to happen. So the April 15th extension, when you file that form, will extend you until October 15th. So while you don't have to actually file the tax return, if you owed money, so say you had a tax amount due, we call it a tax liability, you're still obligated to pay that on April 15th. So yeah, you get some grace to file it, but you still owe the money. So if you have no idea how much you owe, that's going to be hard. If you have zero concept of what you did at all, you're not going to be able to determine that number. And then, you're just going to find yourself with some extra penalties and fees, and that sucks. So just note that you can extend, but you need to be paying in at that April 15th to avoid those fees and things. So, there are some businesses out there that are different entity classifications. We could, partnerships, S Corps, C Corps. That's pretty outside of what we're talking about today. But this, based on just single member LLC type stuff, which is most of, your independent contractor work, unless you've made some elections at the federal level, these due dates are applicable to you. So April 15th for your personal tax return can be extended to October 15th. Another thing to note is not all states accept the federal extension. So really know if your state requires you to do an extra one, because there are several states that do require that extra extension, and you don't want to be caught filing those late. Those aren't great. So another thing I get asked a lot is, what if I can't pay everything that I owe, right? Like, this was my first year in business. I didn't really understand how it worked. My tax liability is significantly higher than the balance in my bank, and I just can't pay it. So the IRS has a program that allows you to pay over time. They're called installment plans. I see a lot of people who owe multiple years and file multiple years all at once. This is a good option for people like that. There's 2 ways to apply for those. You can call in. There's a small fee, but someone will walk you through it. Someone will help you through it, and they'll tell you whether or not you're approved for that. And then the second way is to do it online. It's a formula. You can draw it out pretty long. There's no prepayment penalties. So I usually tell people I would rather see you push it out a couple years longer and have a lower monthly payment and then pay an extra as you see it, than commit yourself to a payment that you may or may not be able to afford, because you do not want to default on these installment plans. It is a slippery slope. And once you start defaulting, it is not a situation you want to find yourself in. Another super important thing to note about these installment plans, the IRS is willing to work with you for a year, maybe 2 years in a row. But this is not a way to pay your taxes year over year. They are not going to let you do this every year. They will eventually tell you these are absolutely due right now. And then every once in a while, depending on who you get, they will disallow all of your previous ones and make the entire balance due. So really know that once you get into one of these installment plans, it is a way to deal with that 1 year or those multiple years all at once. But going forward, you need to file on time, you need to pay on time, and you really need to, toe the line and mind the rules and make sure that you can do whatever you need to do to get on track. So as far as determining how long you need to keep your information, so I get this a lot, right? I mean, everything we do now is pretty digital. So this isn't as big of a deal as it was back in the day when we all had paper files. My first firm, when I started, was very much paper-based, and we had files back to the year I was born. We had a storage room in the basement, and there were just files everywhere, because there's this grand fear of throwing away something that you need, and you, like, the day you throw it away, and the next day someone comes knocking for it, right? So 3 years is the IRS statute of limitations. So 3 years from the time you file that tax return is how long you need to keep all of the documents related to that return. The one exception is fraudulent returns. So say you file a return that you know is wrong, or you did something that you know is wrong, you did it intentionally, and there was fraud in that return, the statute of limitations is unlimited, meaning you would have to be able to provide those documents forever. But we're all just going to be on the straight and narrow, and we're not going to do fraudulent returns, and then you can keep your things for 3 years. So another really important thing to talk about that is really, really relevant right now is the backlog at the IRS. So we have the option to mail in documentation, and we have the option to electronically file documentation. And even in the past, when things have been normal, the electronic version has always been faster and more reliable and easier to track. But these days, it is even more important that everything you can possibly do electronically, you do electronically. The IRS was closed for a number of months during COVID. The employees were working remotely. All of the paper was literally being shoved into these big storage facilities. And so all of that has been added to the already backlog that they were facing to begin with. So we're seeing anywhere from a year to 18 months worth of delays. So the automated notices are still going out, but the people and the paper notices are not being processed. And so there's this huge overlap. And we all know how stressful it is when we get an IRS notice in the mail. And so the concept that you could have dealt with something in your mind, meaning you mailed it in, and as far as you were concerned, it was done with, is not actually true these days. So anything you can possibly do electronically is 100% the preference. We aren't sure when things are going to get caught up. They're working diligently and obviously doing the best they can. But for us, from our seat, we need to do what's best for us. And so electronically is absolutely what we need to be doing. So for electronic filing, obviously either you have, some platform you're using yourself, the TurboTaxes of the world, there's a million that are, coming out, kind of the do-it-yourself type versions. If you utilize a CPA or an enrolled agent, they all have platforms to e-file for you, and that is 100% the way you should be going with that e-file method. If you need to be making a payment, and that is not an option for you, there is an IRS website that you can utilize to make those electronic payments, and that will make them go in a lot faster than a check. And so that's what you should be doing now and probably forever, because it's just organized and fast and fairly easy. So the website is a mouthful, because why wouldn't it be? It's a series of letters. So it's EFTPS.gov. So EFTPS.gov. It is a 2-step process to get started. So don't think that you're going to set up your profile today and pay your due date today. So don't wait until these are due to get this started. I recommend all my new clients do this as soon as we start working together. So the way it works is you log into this account and you select individual. You always, for these purposes, for what we're talking about today, whether you're a business owner or not, you always select individual. You put in your name and your social and like your address or something like that. And then they're going to ask you for some banking information. It's super important you use your personal bank account, anything that's titled in your personal name, because what they're doing is they're taking the information you put in and then they're matching it against your bank account to make sure you are who you say you are. So then the process stops there. You're going to get a piece of mail in your mailbox in 7 to 10 days. We're still seeing that ring pretty true. They're automatically generated, so they don't require people. So those are still pretty prompt. So in 10 days, you're going to get this paper that has a 4-digit PIN code on it. Keep that forever, like ever. You're going to need that to log into this portal for the rest of your existence. So that will allow you to set up the remainder of the setup. So scheduling payments and seeing what your payment history has been, paying any notices that you may receive. All of those things can be done through this portal. And at this time, you can actually change that bank account. So if you wanted the money to come out of a different account, you can change that there too. So super important, high level again, always pay electronically if you want it to be processed in the next year. The EFTPS system is probably the best way to go. They did release a new one. The IRS released a new one a little bit ago. Not as powerful, but also available on their website. And you can do what's called power of attorneys through there, which gives people like me the authority to talk to the IRS on your behalf, which relieves a lot of stress for most people. But that's the gist on paying online. So this would be a good use. This would be super important if, say, you get to April and you're like, I can't file on time, but I really need to pay. You can use this EFTPS portal to make sure that you make that payment, and then you can file by that October 15th date. So the last category, because I know this is a lot and tax is overwhelming. And, I honestly start most of my meetings with like 3 deep breaths type thing, because it is overwhelming and it is scary and it is unknown, and nobody likes IRS notices and nobody likes paying additional taxes. So it is important to just kind of give yourself some grace and make sure that you're learning a little more every year, doing a little better every year, and just move in that direction and do everything with good intentions and never fraudulently. And you'll be all right. You'll be all right if you follow those guidelines. So the next thing is really gathering your information. So when we're a W-2 employee and we have, some bank interest and maybe a couple trades and all that kind of stuff, your tax return is pretty straightforward. It doesn't take too long. You can probably do it on your own. But when you start being a contractor and getting 1099s and trying to figure out what a Schedule C is, that's when things really start to become overwhelming. And that's when I see a lot of people shut down and the 3 years of non-filing happens, and then, tax bills happen. So really getting organized and getting organized quickly will help eliminate the stress and really keep you on track. So what I like to do is I like to have people identify like somewhere in their house where they put all their mail that comes in that's related to their taxes. So every time something comes in, you just, stick it in that corner, or, make sure it all goes in the same place, and that'll keep that really organized. And then identifying which documents come electronically, and then either printing those out and sticking them in your stash, or scanning your stash and sticking them where your electronic ones are, but really making sure that when everything is done and everything's been received, they're all in the same place. So the due date for everything to be sent out was January 31st. So there is some time delay between the 31st and when the mail gets it to you, if that's the delivery method. Some brokerages take a little bit longer to reconcile their stuff, but you should have everything by mid-February, realistically. So getting all those things that come externally is a really pretty straightforward thing to do. So then from there, we move on to, say you were part of that great resignation and you're now a business owner and you're so excited, and then you realize you have to file your taxes and you've never done that before. So the first thing we want to do is sit down and figure out, where did all your money come in and where did all your money go out of? And hopefully the answer to that is, I opened a business bank account when I started this, and it is all in one place. And I laugh because that's not usually how it works, but that's 100% what you need to be doing. So if you're listening and you have personal expenses and business expenses in the same account, I need you to stop doing that immediately. I need you to either open another personal bank account or open a business bank account and use that account exclusively for your business. Because next year at this time, when you sit down to do this, you can run a report and everything contained from that bank account is all business, and it is so much easier. It is 100% more successful if you ever get audited. An auditor will look at that and say, this is a real business. They have treated it as such, and therefore you'll start the meeting with that auditor on much better footing. So stop mixing your personal bank account with your business bank account. Stop that immediately. And it doesn't even have to be a business titled bank account. It can be just another checking account, but only use it for business stuff. So then what you do next is you take all your 1099s that came in from your different vendors. Hopefully they sent them. And those all get added in. And then you remove those totals so that at the end of the day, the amount you receive that you report in income is the total that you received. So there'll be kind of two buckets, right? The people who did 1099 you and the people who didn't 1099 you. But it all comes out to the same exact number of exactly what you received during the year. The next step would be all of your expenses that you had for the business. So, all your marketing, all your subscriptions and travel and client, whatever. So anything you needed to run your business. This is an area that I see a lot of great advice. I see a lot of really bad advice, and then it results in a lot of really confused people. I can't tell you how many times people come to me and they're like, well, my friend's accountant told them that I could deduct this and this and this, and they got a huge refund because they did this and this and this. And it's frustrating because some of it is really great advice, but the frustrating part is that some of it is really awful advice. And the opposite side of that awful advice is that you could find yourself in a lot of trouble if you listen to these people and these people are wrong, which if it sounds too good to be true, it generally is. So the way I like to describe high level what can be deducted is if you need that expense or that subscription or that piece of equipment to carry out your business purpose. So without that, either your business would struggle or it wouldn't do as well, or it would be impossible to manage, then that business expense is likely a business expense. So good example. I own a blow dry bar, right? We buy things like shampoo and conditioner and curling irons and makeup and all of these beautiful things, right? Those products are required to provide the service that we provide at the blow dry bar. Without shampoo, without blow dryers, it's not really a blow dry bar. Okay. So for me in that business, those items are deductible. Okay. So flip that to, I also own a CPA practice. Okay. So I buy shampoo for myself personally, and I buy makeup for myself personally. And I would love to be able to deduct those things because I probably support Sephora almost independently. But those expenses are not required to do my accounting practice. My tax software is, and my computer is, and my internet is, but I'm going to have a hard time convincing an auditor that I need a curling iron to complete tax work or do projections for budgets and those kind of things. So while it is a bit of a ridiculous way of explaining it, it is very much the way it is. If you can sit in front of an auditor and explain to them why you needed X, Y, or Z to complete the business that you have, then those are probably, there's always some exceptions, but those are probably expenses that at least you can start with. Some major exceptions to those things would be a lot of people buy stuff for photo shoots. This is one example that I give frequently. So I recently did a photo shoot and I had to rent a facility. I rented this really cute little house and we get to deduct that. And I paid a photographer and we get to deduct that. And I had to buy prints and different digital assets. So those are deductible. But I also went out and bought a bunch of new outfits, right? So I get asked a lot, can I deduct those really cute outfits? And the answer to that is actually no. The IRS has taken a really strong stance on this, which is if you can wear your outfit in public and the general public cannot tell what you do based on what you wear or what you're wearing, it is not deductible. So think about it this way. I'm wearing a really cute little blouse right now. And I'm sitting on a park bench in the middle of, the city, and I'm drinking my coffee, and walker buyers see me and they say, hopefully they say, oh, what a nice blouse. But not a single one of them is going to be able to say, I know for a fact that she is a CPA who specializes in small business. We don't, right? I mean, I look like I could be, in healthcare. I look like I could be in marketing or any profession that had to dress appropriately for that business. Whereas if I'm sitting next to a fireman or a police officer and they're wearing their outfit, every single person who walks by is going to be able to identify what he or she does for a living based on what they're wearing. So I cannot deduct my outfits because I am nondescript, but the police officer or the fireman is able to, because you're able to identify them based on what they're wearing. So for the photo shoot, again, you can deduct the photographer, you can deduct the digital assets or the print assets, any sort of props that, within reason, that's a kind of gray area. If you had to rent somewhere to go, you can deduct that, but clothing is something that you will likely lose if you were ever to be audited. So just keep that in mind. When you're trying to get that tax liability down as far as you can, that is something that you will not likely be successful with. So that's a great segue into kind of a higher conversation of what happens if I deduct something and I get audited, which, by the way, being audited doesn't necessarily mean you're wrong. So always start with that stance. If you did nothing wrong, this is just your opportunity to explain to them why they picked the wrong person. So if your return is done properly, your expenses are all done properly, while it is intimidating and it is nerve-wracking, it doesn't necessarily mean you are wrong if you are audited. So don't ever start with, oh my God, I'm going to jail. Unless you did something really bad intentionally, you're probably not going to go there. But yeah, so worst case scenario, you take something that you shouldn't have, or you take something that they don't agree with. So what they will do is they will say, this expense is not valid. We're adding it back in to your tax return, which will then increase your tax due for that particular year. So They will levy that on you, meaning they will tell you that that number is due. They will add interest and penalties from the date of the originally filed return. So say it was like a 2019 tax return, you'll have interest and penalties up to the limits from that date going forward. So not the end of the world, not ideal by any means, but that is generally worst case scenario if something does get overturned. And obviously there's way darker paths we could take with that, but generally speaking, if you're doing everything to the best of your knowledge and you're not trying to evade anything, that is the path that you will see. So, really, I think the overarching thing that we need to really focus on is the due dates. So April 15th, it can be extended until October 15th. It does require a form, so it doesn't automatically extend. You are required to pay whatever you owe in April, even if you don't file. So if you don't do that, you're going to have interest and penalties from the date of April 15th until when you actually file and pay. If you can't pay your total liability at the time you file, you can apply for, it's not guaranteed, but you can apply for what we call an installment plan. And then that will help you manage those in smaller payments over a longer period of time. And then really just keeping your information for 3 years to ensure that if you were to be selected for audit, either through random audit or through something that doesn't appear right to them, you'll have that documentation. So a ton of information, a really short time, very high level. Obviously, each one of these subjects could be a riveting 3-hour presentation, which none of us, really want to do. But this is a super important part of being a business owner. And it's one thing that I think nobody who starts a business either feels comfortable with or confident in or, wants to take on. So really understanding this is a huge part of running a business and a successful business, because if you don't get this part right, this part can really do damage to your business. And we all want to avoid that. So for our purposes here, I think this is a good amount of digestible information, but we do have a lot of resources at theempoweredcpa.com, which will take these topics. Maybe one of these topics was really important to you and you didn't understand it or you didn't know anything about it and you wanted to just learn more. There are multiple courses there. There's multiple individual videos that will help explain these things in more detail. So you can work through that. And there's even one that takes you from zero knowledge to pretty in-depth knowledge on the whole entire process. So there is a way to learn this and find out more to ensure that you get to spend your time doing your business and less time doing this, because if you have this under control in a manageable way, you can really focus on your business. So again, head over to theempoweredcpa.com. Tons and tons and tons of resources there. And also, if you do decide to get a CPA or an enrolled agent, just be sure to find one that you're comfortable with. A relationship with a professional like that is super important. So someone who makes you feel supported, someone who doesn't ever think you're, asking questions that are beneath them, just someone who can be a partner for you is important. And also making sure that you've vetted their licenses. You will pay a little more, but an enrolled agent or a CPA will know so much more than, just someone who took a weekend course. And long-term, I promise it'll be more cost effective, even if it costs a little more upfront. Errors in this process are quite costly. So, again, head on over to theempoweredcpa.com. Check it out. There's tons and tons of information. And again, thanks for listening. Happy tax season. I hope we all get through this together in one piece. You can find our podcast on Spotify, Apple Podcasts, or anywhere you enjoy your podcasts.